Whether you are the car in the front or the car in the rear, you want to make sure you have the right coverage on your auto policy. You don't want to find out what your policy can and can't do for you when hit happens. Hi, I'm Craig Covey, and in this video, I want to show you about auto insurance, about how the different coverage limits work, and what to look for when you are shopping your insurance so that you can become a much better consumer of the auto insurance product and know what to look for when getting quotes. So let's jump in and take a look. So regardless if you are the one at fault or it's somebody else that's at fault that has hit you, I want you to be able to understand what the difference is and what it means regarding which position you're in. So first off, I'm going to show you a couple of different examples on policies and what to look for, especially with concern to the uninsured, underinsured motorist coverage. So there's different limits of coverage. The bodily injury liability and property damage liability, those are the parts of the policy that protect you in the event that you are at fault. You're the one that is at fault in the claim, and that will pay out to the other party. So if there are other people that get injured because of you being at fault in the accident, then in this example, there's $100,000 per person, $300,000 for the accident, $50,000 for property damage. Now, if you're injured, in this example, we excluded or rejected personal injury protection and replaced it with medical payments. The difference between the two, first, they both cover for ambulance ride and emergency room care. The difference between the two is that personal injury protection can pay for lost wages. However, the ones that benefit from that getting payment for lost wages are people who are paid hourly and on a regular working schedule. So if you are somebody who's paid hourly, you might get the benefits of this. But if you're in an erratic schedule, you don't have a regularly set schedule, it could be a little bit challenging to get reimbursed. If you are a W-2 employee, then and you're paid salary, then this is something you may not benefit from in the personal injury protection. So because of that, a good majority of the time, we usually recommend using medical. But you could still pick the personal injury protection. There's an extra premium involved when you choose the personal injury protection. Uninsured, underinsured motorist coverage. This is the part of the policy that takes care of you in the event that somebody else is at fault. They have hit you. They do not have insurance, not enough insurance, or they're with a carrier that's dragging their feet and they're not getting you taken care of in a timely fashion. Or they're trying to assign a percentage to you at fault. They're playing their games. So probably 50% of the claims that my clients are involved in which the other party is at fault, we've been filing claims through the uninsured, underinsured motorist coverage because of those circumstances. I've had people where they got hit by somebody that didn't have insurance or they didn't have enough insurance, because I've had clients with bodily injuries. But the more common one these days are that these carriers that people are going with, because they're trying to get cheap insurance, they're getting with these carriers that are not doing their part. So they're declining coverage, and they're basically trying to save money on their side by not putting their resources to work, their claim adjusters and so forth. So they're making my clients file the claim through us with their carrier in order to have our carrier's claim adjusters go and do the work, settle it out for our client, and then go and subrogate back against their carrier. And then they go, oh, okay, it's our fault. Here's a check. So that's kind of the game they're doing now. So it's very important to have uninsured, underinsured motorist coverage. In this example here, because I see it quite often, that there are people that when I see their declaration pages, and this is a good benefit. Remember in the first video I mentioned to you, it's okay for agents to see your declaration pages. It's okay to see what you're paying. But the majority of it is we want to see your coverage. We want to see that we can give you advice. Either we're showing you that we're doing the same or better coverage than what you currently have, or providing you advice as to what the differences are. I had a client this morning. He's got a current policy with another carrier, and I'm trying to quote his auto insurance, and he had something very similar to this. He had the state minimums, $30,000, $60,000, but he had no uninsured, underinsured motorist coverage because he's trying to save money. Well, I'm saving him $300 a year and providing him uninsured, underinsured motorist coverage, which you'll see the way that I like to see it here in just a minute. So I'm giving him a lot more bang for his insurance dollar. He's getting a lot more value out of it. So that's what you're after. You want value. You don't want cheap, because that's where the incidents happen where you end up not having coverage for. So in this example here, there's no coverage for that uninsured, underinsured motorist coverage. So if my client, if I had this type of policy for him and they come to me saying, hey, the guy's at fault, but his carrier isn't doing what they need to do, or they're saying that their guy is not at fault. They're saying I'm at fault, so I need to file a claim. Well, in this example here, I have to tell them, I'm sorry, you don't have any coverage. I can't do anything to help you. You're on your own. Well, that's not fair. That's not what you're looking for out of your insurance carrier or your agent. So that's where you want to have uninsured, underinsured motorist coverage. You're going to see the differences here in just a minute. But let me run through. Comprehensive deductible. That covers you like this one. This example is a low deductible. It's somebody that wants to have windshield coverage. Well, there is a separate deductible you can get for glass coverage. However, my recommendation these days is that if you get like a rock chip, do those rock chip repairs on your own. Pay cash out of pocket. Those are instances that are going to start counting against you. Carriers are now counting any activity that shows up on a motor vehicle record or a clue report. Any activity that includes towing, if you call for a roadside assistance service, or those rock chip repairs, those are starting to count against you. And depending on the carrier, they stay on there now for 3 years or as high as 5 years. Well, we come across people quite frequently that have multiple roadside assistance claims. We quoted somebody a few weeks ago. He keeps locking his keys in the car. So we had 5 claims for locking his keys in the car. We've had somebody recently that had 8 rock chip repairs. Well, each one of those count against you. So my recommendation is to start paying out of pocket for those rock chip repairs to keep the activity on your policies to a minimum so that you've got a better advantage when you go shopping for your insurance to find better rates. Now, if you get to where you need a windshield replaced, if you've got a Ford or a Chevy, or even a Honda, a lot of times those windshields cost about $200 to $300, $350 to replace. Again, that's really low, so I'd recommend replacing that windshield yourself. However, if you're in a higher end vehicle and you've got features on your windshield that maybe provide for dimming of your lights or heads-up display, windshield, the rain sensors, there's things in these windshields now in the higher end cars where these windshields now cost $1,200, $1,800, even sometimes $2,300 to replace. Well, if you've got a windshield like that, then there is a deductible. You can add glass deductible coverage. So with our carriers, that can be a $0 deductible or a $100 deductible. So that's something you may want to have because that there gets to a price range where you might want to make a claim for that. So anyway, enough about that. But comprehensive deductible, glass coverage we talked about, covers you for fire, theft, flood, or hitting something other than another vehicle. So if you hit a deer in the road, that goes to the comprehensive deductible. And then there's the collision deductible, and that covers you if you run into another vehicle. The usual deductible for that is $500. However, there's an advantage sometimes that you might want to consider a $750 deductible or even a $1,000 deductible. You always want to look at the load and the premium when you're looking for that. The load and the premium of the policy altogether falls in line with the bodily injury to others and the collision deductible. That's where the load and the premium is for the whole thing. So as we look at the collision deductible, what I'm looking for, my timeline of risk, is that if you consider going from a $500 deductible to a $750 deductible, that means that you would come out of pocket $250 more if you were at fault in an accident. So what I'm looking for is if I'm going to advise somebody to go to that $750 deductible from a $500 deductible, I want to save them $250 in their premium in 2 years or less. That's the timeline of risk. So in those next 2 years, if I advise them to do that and they do that, then in the next 2 years, they don't want to have an accident. They won't make that gain of that savings. But they get past those 2 years and they continue on. Well, they've saved that $250 difference in the premium. It's back in their pocket. And then for every year thereafter not having a claim, that's additional continued savings back in their pocket. So I hope that makes sense. That's my timeline of risk to where I look at it making sense looking at going with the higher deductible. So as I go on about this, let's take a look at another example here. This one I wanted to primarily point out to you that this person has bodily injury, liability to others, but they don't have any uninsured, underinsured motorist coverage. It should not, do not want to have a policy like that. pull out your declaration pages and take a look and see what your coverages are. I'm going to show you what you should be seeing here in just a minute. Here's another example, though, of another one. Bodily injury. I'm sorry, that's not the one I wanted to show you. Hold on. This one. So bodily injury, liability to others, $250,000 per person, $500,000 for the accident, $50,000 for property damage. Again, this one we optioned for medical coverage instead of the personal injury protection. But then here we get to the uninsured, underinsured motorist coverage. They've got coverage, but they've got the state minimums. $30,000 per person, $60,000 for the accident. I see this kind of common as well. So bodily injury to others, you're protecting your retirement plans, but what about protecting yourself just as much as you're willing to protect total strangers? There's a higher likelihood that somebody else is going to hit you before you'd hit somebody else. You're an excellent driver. So the uninsured, underinsured should match that bodily injury to others. So let me show you what I mean. So here you see bodily injury, liability to others. Again, $250,000 per person, $500,000 for the accident. And then for the uninsured, underinsured, it matches. This is what your policy should look like. You should always see these matching. So in this example, $250,000, $500,000, you should see that twice. Now, there's different limits of coverage. There's $30,000, $60,000. Then the next limit is $50,000, $100,000. The next limit from that's $100,000, $300,000, and then $250,000, $500,000. There are other limits above that, but those are the ones that I'm focusing on because those are the ones that you mostly see in the consumer place when you're shopping for your insurance. Now, once you have insurance, it's not that much more to go up in coverage. So if you currently have, for example, $50,000, $100,000, go ahead and request a quote, if they don't do it for you already, to ask them, okay, what would my rate be at $100,000, $300,000? And maybe even ask for $250,000, $500,000. Oftentimes I'll quote $50,000, $100,000 and show $250,000, $500,000. 5 times more coverage, but it might only be $10 or $15 more by getting that so much more coverage. You're getting more insurance, more value for your insurance dollar, more bang for your insurance dollar is what I usually say. So that's the goal, is to better protect you, protect your retirement plans, right? I'm sure it doesn't include saying, hello, welcome to Walmart as part of your retirement plan. So that's why you want the higher limits of coverage. But then the same thing for you. We want to make sure you're taken care of in case the instance where somebody else hits you and they don't have insurance, not enough insurance, or they're with a carrier that's dragging their feet, and you're injured, and we want to get you taken care of. So that's the uninsured, underinsured motorist part. Now that limit there for that uninsured, underinsured cannot be higher. It cannot be higher than that bodily injury. So that's why I'm always trying to make that value for that insurance dollar so we can get higher limits to make sure that you are taken care of the best that you can, making your insurance dollar work hard for you, right? Make sense? So as an example, that uninsured, underinsured motorist coverage, I had a client that was killed in a head-on collision. And so we paid out, my client, the husband, we paid out the maximum limit there for that uninsured, underinsured coverage, while the person that hit and killed my client, he was a drunk driver. He's sitting in jail. We couldn't get access to him. So within 2 days, we had a check in my client's hand, the husband, for that uninsured, underinsured motorist coverage. Another example, these limits of coverage here, I had a client that was, a guy was pulling out of a gas station in front of her, and she couldn't stop in time. She T-boned him and broke her thigh bone, got a metal rod permanently installed in her leg. She was 17 years old. And the other party's limit of coverage, see if I can pull this up real quick. No, not that one. Let's try again. His limit of coverage, he had the $100,000, $300,000. So his bodily injury liability to others kicked in because he was the one at fault. So the $100,000, because she's the only one in the vehicle, the $100,000 comes into play. Well, her surgery alone was $118,000. So his carrier pays out the $100,000 and they're done. So we kick in through the uninsured, underinsured motorist coverage. She had $250,000 per person, $500,000 for the accident. We pay off that $18,000 balance on that medical bill. Now she's got a metal rod permanently installed in her leg, 17-year-old girl. As her father or mother, how much money would you want for her pain and suffering and having a rod permanently installed in her leg? How about for yourself? Probably as much as you can get, right? So that's where we want to get that $250,000. If you had $30,000 of coverage and you paid off that $18,000, well, then you only have $12,000 left. Well, let's go back to that other example. Let's say you don't have any coverage. Let's say you don't have any coverage here. Well, there's no help. There's an $18,000 balance of the medical bill that you're left with, and you're suing this other guy, and you don't have any coverage here. So your insurance company can't help you to sue the other guy. So you've got to turn to an attorney, and now you got to wait until that settles out, and it could take a couple years to settle out. So here, now let's go through that example maybe with, like I mentioned, I brought it up, the $30,000, $60,000. Let's say you've got something like that. Well, then we pay off the $18,000, and that only leaves $12,000 for pain and suffering. But that's not going to be enough, right? You want as much as you can get. So that's where the $250,000, $500,000 comes into play. So for my client in that example, we paid off that $18,000 medical bill for her and paid her $92,000 in pain and suffering settlement. So we made her whole, $110,000, made her whole in that example right away. And then the insurance carrier, turns around and subrogates back against that other party. So, and to that other party, because we now have another $110,000 we need to get from them. Their carrier had already paid out what they had made their agreement with on their policy coverage. So now, usually what happens is it becomes a lien against that other person's earnings for a 10-year. It's a 10-year lien, and hopefully that's enough to pay it off. And if it's not, then they file it again. So that's where you want to be able to have as much coverage as you can get to protect your exposures. And that leads into maybe an umbrella. An umbrella policy can sit on top of your other policies, your auto, your home. If you got a boat or motorcycle, it can sit on top of those as well. That's saved for another video. But I hope that this made sense, that you found this informative, and that it helps you to be a much better consumer. You have a better understanding of the coverages, how they work, and what to look for when you are shopping for insurance. You want to keep an eye on that uninsured, underinsured motorist coverage, and keep the idea open about the deductibles. If there's a possibility that if you consider a higher deductible, will it put the savings of that premium back in your pocket in 2 years or less? If it takes longer than that, that means that you're increasing your risk exposure, and the opportunity for you to be able to save that money may not happen if it takes much longer than that for you to save that money. So I hope this helps. I'm Craig Covey, and if there's anything we can do for you, if you'd like us to shop your insurance for you, we'd be happy to do that too. Thanks, and we'll talk to you soon.